Hello, this is Sungko, the Korean bro. Today is 2022, December 20th. Uh, it's been a couple of days since I did YouTube last time, and I really wanted to do YouTube live tonight, so I turned it on. I've been busy going to work. Hmm. I've been busy going far away from my home, so it's been really hard for me to do YouTube live. Anyway, I really wanted to read articles about stock, so I came back. Anyway, mm, what I'm going to look at first is mm, let's see. Hmm. Mm, hmm. Let's go to malifu.com, okay? Mm. Virtual reality pioneer John Carmen lives job in Meta. What this could mean for the stock? A bull market is coming. Three stocks buy like there's no tomorrow. Lucid is reviving up, but the Nasdaq stock is jumping even more. Down 33% in 2022, can this unstoppable growth stock make a comeback in 2023? Okay, first things first. Virtual reality pioneer Joan Carmack lives job at Meta. What this could mean for a stock? Programming wizard Joan Carmack has stepped down from his position as consulting CTO at Meta Platforms. The company's VR metaverse focus is already under fire, and Carmack's exit represents the departure of a high-profile talent. Inefficiency seems to be a key problem at Meta, but the company's VR dream isn't dead yet. Hmm. One of the most visionary minds in software just stepped of Meta's big VR push. Okay. Over the weekend, software pioneer, virtual reality pioneer, visionary John Cormack announced that he will be leaving his position as consulting chief technology officer at Meta Platforms, citing efficiency issues within the company's VR unit and a lack of progress on the hardware front. Hmm. The famous technology innovator closed the door on a decade largely spent on pushing VR forward. Hmm. Meta Platforms has positioned virtual reality and the metaverse as central to its growth strategy, and it's now lost to someone who was arguably its most visible talent in these fields. Given that the company has bet so much of its future and success in these areas, what does Karma's act mean for Metastyle? Hmm. Okay, let's get to the bottom. So, the point of this article is that the key player of Meta platform has just mm, left this company, and this could mean uh, really big. And what does that mean for investors? Already facing headwinds due to macroeconomic pressures tamping down digital ad spending, and industry shift to privacy changes implemented by Apple on its iOS platform, Meta Platform's big spending on VR and the metaverse has worried some investors. These initiatives aren't generating much in the way of revenue compared to their substantial development costs. And Meta's Reality Labs division has been racking up billions in losses per quarter. Beyond the loss of a valuable talent, Carmack's departure may also highlight structural problems within the company. In his exit letter, tech pioneer described Meta as an org that has only known efficiency and indicated that some at the company would be happy to be working at less than a quarter of the capacity they were capable of. This critic seemed to echo concerns raised by CEO Mark Zuckerberg earlier this year. Hmm. In a June announcement, the Meta would slow hiring. Zuckerberg indicated that employees would have to work harder and said, realistically, there are probably a bunch of people at the company who shouldn't be here. The company then went on to fire roughly 11,000 employees in November. While Kumar was often critical in his accent message, he also ended it on an optimistic note. The tech virtual said VR can bring value to most of the people in the world, and no one is better positioned to do it than Meta. Carmack's departure doesn't mean that the company's virtual reality dream is dead, but it does bring into focus the difficulty of what Meta is trying to accomplish. The fact that the company hasn't had an easy go of things lately. So the thing is, what Meta has been doing is really important, and um, the fact that he lives this company is not going to change um, mm, the mindset of this company, and there's no doubt about there's a future lies on VR, and mm, but the fact that he lived this company means that it's that difficult. Uh, that's what we can mm, uh, get from this article. Investor probably would worry about its future because he's been doing really major role in this company. Okay, let's go to next one. Okay, a bull market is coming. Three stocks to buy like there is no tomorrow. Pinterest has returned to user growth and has a lot of monetization potential. Okta is a leader in cloud profitability and ramping up profit margins. The trade desk is growing quickly and defining the post-cookie ad tracking standard. Okay, let's read all of them. Okay, uh, let's go to first one. Pinterest. Like other social media stocks, Pinterest has fallen sharply over the last year as revenue growth has slowed. Pinterest. Right. In the year 2018, its revenue was 755 million. 2018. Mm, okay. Oh, those headwinds are the result of difficult comparisons with its performance in 2021 and a general slowdown in digital advertising that has weighed on the peers like Alphabet, Meta Platforms, and Snap. However, there are several reasons why Pinterest looks primed for a comeback. First, after several quarters of declines in its user base, the company returned to solid growth in the third quarter. Um, its user base grew in all three of its regions. Its user base grew in all three of its regions, up on a sequential basis from 433 million to 445 million. Similar, even in a challenging macro environment, Pinterest continues to grow average revenue per user, which rose average revenue per user, which rose 11% overall to $1.56 and 80 RPU in North America. Its most valuable market was up 15% to $6.13. That growth is a notable contrast from peers Meta and Snap, both of whom saw ARPU fall in the third quarter. So in terms of ARPU, they're up compared to their competitor, uh, which is Meta and Snap. New CEO Bill Reddy is also well versed in e-commerce, having previously run Google Shopping and payments program, and Pinterest is fast making improvements in areas like video and ad performance tracking, making the platform more useful for users and advertisers. So, new CEO has worked in this industry before. He worked at Google. He once run Google Shopping and payment program. So it's proven that he has expertise in this field. Mm. Finally, Pinterest has an edge over other social media platforms because many of its users come to the site with purchase intent, making it more valuable to advertisers. The company is also solidly profitable on an adjusted basis. When the ad market bounces back, Pinterest is likely to be a big winner. So, to sum up, Pinterest, um, they gained a lot of users lately. Of course, they lost some of its users in the beginning of this year, but then last third quarter, in the third quarter, they gained users again, and also CEO has expertise in this field because he worked at Google. He once ran he once run Google Shopping and payments program. Hmm. Okay. Uh, and unlike other media platforms, users have certain purpose when they visit this site. Uh, they um, they come to site with purchase intent and making it more valuable to advertisers. So, mm, Okta, the leader in cloud identity. Okta is another tech stock that has crumbled this year, but the sell-off represents a great buying opportunity for an independent leader in cloud identity software. Okta. Its current price is 65.35, and once in the year 2019, its revenue was 399.25 million. 19. Okay. Mm. Okay. Okta makes tools that allow business employees to seamlessly and securely log into the apps they need and stay connected. Okay, let's repeat this once again, okay? Makes tools that allow business and employees to seamlessly and securely log into the apps apps they need and stay connected. It's been a rich growth opportunity for a company thus far as revenue grew 37% in its most recent quarter. Hmm. So Okta makes sure that people use app or program safely and make them stay connected as long as they use it. Um, uh, so to sum up, it's a cybersecurity program. It's been a rich growth opportunity for the company thus far as revenue grew 37% in its most recent quarter. However, Okta is facing headwinds from the macroeconomic climate. So it's not just a lot of company are struggling because of high interest rates, right? Supply chain issues, and Okta is facing the same issue as well. They are facing headwinds from the macroeconomic climate and unforced errors in its integration of Auth0, the customer identity software company acquired last May. The customer identity software company. So Okta and Auth0. Auth0, it's a acquisition of Auth0 uh, has possibly made Okta um, uh, even valuable because Auth0 is uh, concentrated on the customer identity software. Okay. While the company expects sales growth to decelerate, it's also rapidly improved profitability, smashing estimate in the third quarter, ensuring Wall Street it has more control over its bottom line than previously thought. Okta is also expanding its platform by going into adjacent markets like identity governance, access, and privileged access management. Mm. So, okay, they are. mm, mm, they make sure that people connected to what they are using, and they make sure that they are using programs safely. And it's not only that, but they are also trying to open business in adjacent market, which is um, identity governance access and privileged access management, which makes its addressable market now valued at $80 billion. That compares to expected revenue this year of less than $2 billion. The software stock now trades at a price sales ratio of 6, a great valuation for a company with a long growth path in front of it on the top line and rapidly improving margins on the bottom line. Let's read some other articles about Okta. Mm, okay, let's read this one. Okta is one of the stocks most watched by Zex.com visitors lately, so it might be a good idea to review some of the factors that might affect the near term performance of the stock. Shares of this cloud identity management company have returned 40.6% over the past month versus the Zacks and P500 companies plus a 1.1% change. Zacks, okay. Mm. Okta provides identity solutions for enterprise, small and medium-sized business, university, nonprofits, and government agencies. Identity solutions. Identity solutions. Um, the more uh, as the time goes by, the more business. It's highly likely that a lot of businesses will have their own program or their own website, and many people will be using uh, those kind of programs, right? And identity issue uh, is really important because people mm, don't want to worry about their identity being stolen by someone else, right? And they want to have their identification um, be safe, right? So mm, a lot of business will be using identity. What is it? Identity, not identity. Identity solutions. Let's read this one again. The company offers Okta Identity Cloud, a platform that offers a suite of products and services such as Universal Directory, a cloud-based system of record to store and secure user, application, and device profiles, a foreign organization, single sign-on that enables users to access the applications in the cloud or on-premise from various devices. Adaptive multi-factor authentication provides layers of security for cloud, mobile web applications and data. lifecycle management that enables IT organizations or developers to manage a user's identity throughout its lifecycle. API access management enables organizations to secure APIs. Access gateway that enables organizations to extend the Okta Identity Cloud from the cloud to their existing on-premise applications. And advanced server access to secure cloud infrastructure. It also provides Auth0 products, including universal login that allows customers to provide login experience across different applications and services. Blah blah blah. Attack protection. Blah blah blah. Okay. Okta. Let's go to their website. 6,000 employees are currently working at this company. Its headquarters located in San Francisco. And its CEO of this company is the Todd McKinnon. Okay. Everything starts with identity. Identity can create great user experiences, increase customer signups, improve employee productivity, and get apps to make market faster. Anyone can safely use any technology powered by their identity. 7,000 plus integrations. Built to tackle both customer and SaaS apps across every industry, authenticate, authorize, and secure access for application devices and users. Workforce Identity Cloud, secure your employees, contractors, and partners wherever they are. Covers every part of the identity lifecycle, from governance to access to privileged controls. Okay, let's get to the next one. Okay, the Trade Desk, an ad tech pioneer. The Trade Desk is the most valuable pure play ad tech company and a rare growth stock that also delivers strong profitability. The Trade Desk ad tech company and a rare growth stock that also delivers strong profitability. The Trade Desk. Its current price is 44.13. 2018, 477.29, 407. 2018, in the year 2018. Okay, is the most valuable pure play ad tech company and a rare growth stock that also delivers strong profitability. Trade Desk operates a self-serve, cloud-based, demand-side platform, allowing customers to manage their ad campaigns in real time. The product has been overwhelmingly popular as the company has had a customer retention rate of 95% or greater in every quarter over the last 8 years and has steadily grown over the last decade. Revenue was up 31% in the third quarter to $395 million, significantly outperforming its peers and digital ad platforms. And it posted an adjusted net income of $123 million, showing the scalability of its business model allows it to earn wide margins. The Trade Desk Unified ID 2.0 is also shaping up to be the leading alternative to third-party cookies, which Google is planning to ban from Chrome by 2024. UID 2.0 is free, but it encourages customer loyalty and more signups for its platforms. Despite the Trade Desk strong growth this year, the stock is still down 50% due to headwinds in the ad industry. So, in general, this year has been tough for a lot of ad companies, right? in the ad industry. And the trade has also has struggled with its headwinds. If the company can continue to grow through the potential recession, the stock is likely to explode when the economy rebounds and overall advertising demand bounces back. Mm, The tradedesk.com. Mm. Self-service cloud-based platform that allows buyers create, manage, and optimize data-driven digital advertising campaigns across various formats and channels. Mm, The Trade Desk, we have Pinterest, Okta. Okay. Lucid is moving up, but this Nasdaq stock is jumping even more. Market was mixed again Tuesday morning, and the Nasdaq posting a modest loss. Lucid Group shares rose after the company successfully concluded a capital raise. Verona Pharma has strong clinical trial results that send its shares soaring. Lucid gets the money once. Hmm. Verona gets the COPD1. Should you invest in $1,000? Anyway, let's read Lucid. Let's read the articles about Lucid first, okay? Shares of Lucid Group were higher about 5% pre-market trading on Tuesday morning. The electric vehicle company revealed that it has completed a program designed to raise capital for its auto business in an effort to strengthen its balance sheet and give it more liquidity to make investment in business expansion and for other general corporate purposes. Lucid sold more than 56.2 million shares of common stock as part of its at the market equity offering program. Gross profits amounted to $600 million, implying an average stock price in the neighborhood of $10.65 to $10.70 per share. When you combine that with $950 million more in capital raised from a private placement of 85.7 million shares to Saudi Arabia's public investment fund at roughly the same price, Lucid will now have more than $1.5 billion in additional cash. So this explains how much money they have. Okay. Hmm. Lucid has seen huge ups and downs in its time at a publicly traded company. Hmm. The EV stock soared in 2021, riding higher on general excitement about the electric vehicle space and the prospects for new entrants like Lucid to challenge established industry leaders. Yet in 2022, harsh realities have set in, and investors have grown more impatient for young companies to build up their businesses and prove their ability to thrive in an increasingly competitive market. Tuesday's modest rise does little to recover lost ground from earlier in the year, as Lucy stocks has still lost more than 80% of its value since the start of 2022. Longer term, Lucy will have to ramp up production and see continued appetite for its EVs in order to turn its stock price around. Hmm. Uh, okay. Anyway, the point of this article is that they successfully concluded a capital raise, and which could potentially help them have business thrive in the future. And they will ramp up their production, right? Here it says they will have to ramp up production and see continued appetite for its EVs in order to turn stock price around. So they have uh, much money and they have to ramp up production and they have to look for appetite of its EVs to have their stock turn around, right? Okay, next, mhm, mhm. Okay, a new bull market is coming. Take Warren Buffett's and Peter Lynch's investing advice. Okay, let's see. Bear markets are generally defined by widespread fear, and that leaves many stocks trading at bargain prices. Businesses backed by a durable competitive advantage can create tremendous wealth for patient shareholders. Bear markets vary in duration and severity, and but missing the inevitable rebound is one of the worst mistakes an investor can make. Okay. Hmm. Red high inflation and rising interest rates have led to recession fears, causing the stock market to fall sharply. In fact, the S&P 500 had its worst first half in more than 5 decades this year, while the Nasdaq Composite suffered its sharpest downturn since the Great Recession, and both indexes have fallen into a bear market. Those events have destroyed trillions of dollars in wealth, leaving a sizable dent in many portfolios. Nevertheless, investors can find comfort in cold, hard facts. Both indexes have been through dozens of bear markets in the past, but all of them have ended a new bull market, and there is no reason to expect a different outcome this time. Better yet, bull markets have historically created far more value than bear markets have destroyed, right? Unfortunately, predicting market cycle is impossible, but each day brings the next bull market a little closer, so investors should be preparing their portfolios now. This advice from Warren Buffett and Peter Lynch can help. Okay. Emotions like fear and euphoria are part of human nature, but they often lead to irrational decisions. Warren Buffett hit on that idea when he said widespread fear is your friend as an investor because it serves as bargain purchases. People tend to be too optimistic during good times and too pessimistic during bad times, meaning stocks are often overvalued during bull markets, undervalued during bear markets. Peter Lynch had a similar philosophy. He managed that Magellan founded Fidelity between 1977 and 1999, and despite facing two bear markets and six market corrections during that 13-year period, Lynch achieved a market-crushing annualized return of 29.2%. Those bona fides make his advice all the more credible. Lynch once said, a correction is a wonderful opportunity to buy your favorite companies at the bargain price. In a nutshell, investors can prepare for a next bull market by capitalizing on the buying opportunities created by the current bear market. According to Buffett, all there is to investing is picking good stocks at good times and staying with them as long as they remain good companies. A bear market certainly qualifies as a good time to invest, but what does it mean to pick good stocks? Buffett says the most important trait a business can possess is a durable competitive advantage, which refers to quality or asset that allows a business to consistently outperform its peers. Competitive advantage comes in different shapes and sizes, but investors can find many good examples by examining Buffett's portfolio. For instance, Apple benefits from tremendous brand authority in consumer electronics. Amazon benefits from some super technology in cloud computing and a powerful network effect in e-commerce. And Taiwan Semiconductor benefits from immense scale and cost advantage in chip manufacturing. Hmm. So Apple brand authority and Amazon super technology in cloud computing and powerful network effect in Taiwan Semiconductor has cheap uh, cost advantages in cheap manufacturing. The first step in identifying a competitive advantage in research, investors need to know a company inside and out before they can possibly access its competitive position. For that reason, Buffett has cautioned investors to never buy stock without first understanding the business. So what I have to do is read until I really grasp the sector and industry. Um, Otherwise, I've been losing money, right? As discussed earlier, every bear market has ended a new bull market, and the S&P 500 and also composites have inevitably recouped their losses. The said downturns vary in duration and severity, meaning the current bear market could get much worse, and it could last much longer. The worst mistake an investors can make is trying to time the bottom. So it's impossible to time the market. Okay, more than 80% of the S&P 500 index's best days in the past 20 years took place during a bear market or during the first 2 months of a bull market. Missing those days, 80% of the S&P index's best days in the past 20 years took place during a bear market or during the first 2 months of a bull market. Missing those days can do lasting damage to a portfolio. For that reason, Reinch once said, the real key to making money in stocks is not to get scared out of them. Okay. Can prepare for the next bull market in 3 ways. Deploy capital in the current bear market. Pick stocks that benefits from a durable advantage. And hold these stocks through any future volatility. Hold that time. Hold those stocks through any future volatility, and pick one that has a good advantage over others. Deploy capital in the current bear market. Okay. And let's look at this one. ODB. We have ODB. Hmm. 2019. Okay. My first pick to double by 2025 is Adobe. The software company sits at the intersection of creativity and productivity. Productivity, which is essential in today's digital economy. More than ever before, organizations must create digital materials that are illuminating, specialized, and captivating. Adobe's suite of products, including Acrobat Photoshop, Creative Cloud, and many others, helps organizations achieve exactly that. Okay, we have Adobe and Lululemon. It's getting a bit late, so I'm gonna just stop at this point, and I'll see you guys again. Okay, see you and have a good night. Okay, bye bye.